Welcome once again, ladies and gentlemen, to the Fiscal Philosophy YouTube channel, where Grab has been in my portfolio since March of 2024, and I have been making videos on it pretty much the entire time. It has recently become the latest darling of the X or Twitter platform over this weekend. I was really not expecting that to happen. I don't know exactly what triggered it, but I noticed the increase in posts after seeing one that mentioned Toyota, the car company, released its 13F and had bought $1 billion worth of Grab stock. And ever since I saw that post, I have seen so many about this company. So I figured it would be a good time to reiterate some of the things I like about the company in anticipation of the pump that may be coming this week, as now retail investors have finally noticed this thing. First and foremost, you have the up and to the right revenue growth of the business. Now, lately, yes, it's not as fast as what it used to be, but it's still there. And I think it's important also to note that since they report in USD but transact in a lot of local currencies in Southeast Asia, that the conversion to USD actually hurts their performance in a lot of the numbers that are officially reported. So I suggest if you get into the stock that you pay attention to their presentation, where they usually outline the reported numbers versus constant currency, which compares how the business is performing in the actual current local currencies where they transact, instead of just what it becomes when you convert it all to USD, because the stronger dollar and the weaker various other currencies plays into this pretty heavily. Secondarily, we have the free cash flow. I pulled this from the investor presentation from the Q3 report. So the important thing to look at with regards to their free cash flow is actually the adjusted free cash flow, because they do get rid of deposits made on their fintech banking segment. Otherwise, it would artificially inflate their free cash flow numbers. So they had adjusted free cash flow of $137 million in the quarter ended in September. That's pretty good, especially considering that they just turned positive on these numbers very recently. So I anticipate that if they can keep growing their top line moderately well, and more of that converts into cash flow, that we're going to have a very healthy cash flowing business on our hands. And the market obviously is now starting to recognize this for whatever reason, maybe because of the 13F filings I mentioned before, maybe just because of the buzz surrounding it. I don't know. But whatever it is, people are probably going to start piling in now. Glad I have my accumulations already pretty much done. I have 3,200 shares, got almost all of them except for a few below $4, a lot of them in the low to mid threes. So we're sitting pretty. But if you thought I was done there, I'm not. We also have the balance sheet. So they have net cash liquidity of $5.8 billion with the B. They are cash flow positive, so they're not burning cash every quarter anymore. And they've got this giant war chest. Now, this liquidity does include some online banking deposits, but still, they have an enormous amount of cash on the balance sheet, negligible debt, and cash flow is starting to come in. They're in a great financial position right now. So I like to see this, because a balance sheet like this takes a lot of the risk out, especially if you got into the company cheap, like what I did. So love to see this balance sheet. And there's one more thing also that I like to see. 2 words: financial services. Grab's financial services segment, I would say is still early days, but when you look at their deposits, they are growing quickly. You look at loan disbursements, and they're growing quickly. And you also have the fact that, okay, this isn't a brick and mortar bank. They are a trusted brand, so you give this flywheel where people recognize Grab, see that they're offering financial services. It's an easy get to acquire the customers and the deposits. They've even said so themselves that it's not costing them much to get these deposits in the door. These deposits are growing rapidly, and their loans dispersed are growing as well. And they have a pretty low default rate, and they could even end up getting spun by some as an AI play, because they talk about the advanced algorithms and machine learning and whatnot that goes into how they do their underwriting and make their loan lending decisions. So that's an interesting factor. It seems though that without a lot of the overhead that a lot of other banks have with brick and mortar locations, the fact that they're using technology to aid in a lot of their their lending decisions, and they have such an underserved audience in a lot of the places where they operate, this could actually end up being the big mamma jamma one of these days. But again, it's a little bit early to know how big a success this could end up being, or if heck, maybe it won't go as well as we want it to. But just on their main business, that is rideshare, food delivery, etc., there's so much potential. But this is just even more potential on top of potential, and right now it looks like it's poised to do well in the long run. So they are doing an earnings conference call, 7 p.m. US Eastern Time on February 19th. If my schedule allows it, I might try to live stream it, but more than likely I'll be just listening to it and then doing a reaction maybe the next day. Now, a couple honorable mentions of things I didn't get to yet in this video that kind of go to my case. One is the Uber angle. Uber owns 15% of this company. Uber did that in lieu of trying to compete with them in their territory. Uber's CEO is on Grab's board of directors. There are aligned interests. The only company I think that has the war chest, the financial power, the scale that would be needed to try to compete with Grab in this area would be Uber itself. And they don't want none of that. In fact, they want Grab to succeed. So that's one thing. The other is a lot of the markets where they operate, your Malaysia, your Indonesia, your Vietnam, your Thailand, your Philippines. These countries have, by and large, better population pyramids than a lot of more developed countries. And per capita GDP is still growing. Granted, it's low for the most part, other than Singapore. Malaysia is catching up actually to China in per capita GDP. But a lot of the other countries where they operate, it's quite low, but growing still. Population is growing, so overall GDP and per capita GDP growing. And so that means they're still developing economically. But as they develop more economically, there may be more potential customers for Grab rides. And also, from what I've seen in my world travels, Grab operates in a lot of places where it's not convenient for most people to own a car. And so these highly urbanized areas, Grab will potentially only become more popular. Also, in my travels, I have personally used the app myself dozens of times for rides and food delivery, and can vouch for its efficacy and that it works just as well as you would want it to. If you come from, say, the US or somewhere and you're used to using Uber, it's not a difficult adjustment to get used to using Grab. and your user experience is just as good. So that's all I've got for that. Thank you once again for watching, and check out a few last words from me. If you made it to the end, I want to thank you. It means a lot to me that people watch these videos. Feel free to subscribe if you want to see more. Comment below with any thoughts you have about Grab. Like for the algorithm, my Discord is linked in the description. I talk about Grab on there and some other stocks like Medical Properties Trust, High Tide, etc. Also, follow me on the X platform at Mr. Macho Mog, trying to build up a little bit of an audience there too. Take it easy, everyone, and have a wonderful night.